Similar to many of the other Caribbean countries, St Kitts and Nevis was hit hard by the 2008-9 global economic and financial crisis, and the country's fiscal deterioration was significant, exacerbating the already high public debt levels. At the end of 2010, and with public debt of almost 200% of GDP, St Kitts and Nevis had reached the highest debt level among all emerging markets and developing countries. Also, more recently, the country has been adversely impacted by the increase in food and fuel prices. In order to address these challenges, the government has started to implement an ambitious, homegrown economic reform program and asked the IMF to accompany them in this effort, including by providing financial support. The overarching objective of the government's economic program is to significantly reduce public debt and putting it on a sustainable path for achieving low debt and higher economic growth. This is a real paradigm change. As part of this effort, the authorities have already implemented important revenue and expenditure measures, such as the value-added tax, an increase in electricity tariffs, and constrained expenditure growth. These measures are already yielding positive results. But given the very high debt levels, these efforts are not sufficient, and hence the government is embarking on a comprehensive debt restructuring exercise involving all its creditors. This debt restructuring will not only lower public debt, but also ensure that there is burden sharing by all. Finally, the government intends to further strengthen the financial system, which is a key element of the program. As part of this effort, the government has established a banking sector reserve fund, which is administered by the Eastern Caribbean Central Bank as an insurance policy, that is, to be able to provide temporary liquidity if needed. Since St Kitts and Nevis is an important member of the ECCU, these measures will not only be beneficial for the country itself, but further strengthen the Eastern Caribbean Economic and Monetary Union. The new program with St Kitts and Nevis is a 3-year standby arrangement amounting to about $84 million or some 228 million EC dollars. Even by IMF standards, the program is somewhat special that it provides significant financial resources up front, which we call exceptional access. Otherwise, the financial resources will be dispersed in 12 installments.